We found a $1.7 million trade on Crocs stock, ticker symbol CROX. And what's also very unusual about this is that Crocs reports earnings next week, February 13th. And so in this video, we will analyze this unusual option activity to find out if this wealthy investor is bullish and buying Crocs before earnings or bearish and selling Crocs before earnings. Because as we all know, the rich have more access to information, including leaked insider information, such as earnings reports, to make better financial decisions. No wonder the rich get richer. And so without further ado, let's dive into our analysis. Now, as you can see here from the charts, Crocs is currently trading at a very strong support level here. And notice that on the previous earnings report, the stock crashed down. And so will the stock crash down again, or will it bounce back up? To answer this, let's dive into the data to find out how this wealthy investor is trading. As we can see here on the options time and sales tape, 6,507 contracts were being traded at the same time as a spread. These are the February 21st options at the 105 strike call and the 120 strike calls. And we can see the price that was being traded at. And so we can do a quick calculation of the total trade costs. We have $320 for the 105 strike calls and $55 for the 120 strike calls. So we subtract by 55 and we get $265 per trade. And since we know there was a total of 6,507 contracts, we multiply that out and we get a total trade cost of $1.7 million. But keep in mind, earnings is coming up soon, and so this is a higher risk trade in comparison to the trades that we share on our website. If you want to get access to lower risk, higher probability of profit trades, then make sure to go to our website. We will put a link to our website at the top here, where you can also learn trading strategies that further reduce risk while increasing the chance of profit. Now, with that said, we still traded this, but we use position sizing to manage our risk. You can see here for the February 21st options, at the 105 strike calls, we have our position here. POS stands for position, green means buy, and red means sell. And notice that the open interest for both of these options is much less than the 6,500 unusual options. And that is how we know these are new opening trades and not closing trades. And that is why we also bought these 105 strike calls and we sold the 120 strike calls for $215 each. We were able to get a better price since the stock went down lower at the end of the day. And so when we analyze this trade, you can see here on the risk profile profit loss graph, where the x-axis represents the share price of the stock, which is trading over here, and the y-axis represents the profit loss. Note the zero break-even line over here. And so when the purple and blue line is below it, it is a negative loss. And if it is above it, it is a positive gain, because this is a long bullish trade. And we can confirm it on the Greeks. We have a positive delta trade. If it was a short bearish trade, it would be a negative delta. But be aware of the risk on this trade. We have a very negative theta decay here, which means that as time goes on, this trade loses value. And that is why the purple line, which represents the current date, drops down to the blue line below the zero, because the blue line represents the expiration date. And so you can see that the break even shifts up higher all the way to $107 per share, where the stock needs to trade above in order for it to be profitable at expiration, even though the call options had a strike price of $105. And so this is another reason why this is a higher risk trade and why we use position sizing to manage our risk, because we don't put a lot of capital into these higher risk earnings trades. We put most of our capital in the lower risk, higher chance of profit trades that we share on our website. If you want to get access to those, we'll put a link at the top here, because not all of these trades will be winners. Some will be losers. But as long as we diversify with higher quality stock picks based on stronger data analysis, then we can become more profitable in the long term. Let us know in the comments below. Do you think Crocs will rally after earnings, or will it crash down? As usual, please hit the like button, subscribe if you haven't, take care, and have a wonderful day.